Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Thursday, November the 17th. The year's 2022. Let's talk trading. Trading without a system is erratic. Part 3 with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we've been talking about trading without a system's erratic. But, I think we've been kind of focused on the charts and the entries, but we haven't talked about being having a system with the money management and really not being erratic.
Yeah, we haven't really touched that much on it. I think we touched on it a little bit, but not very much. But that's another part of trading that definitely has to be under control, and what I like to say, within the bank, following your rules. And I'll talk about the trade I was in earlier today, and you were there for part of the trade. I think I got into the trade before we got on the phone, but got into the trade. Had a nice little opportunity stacked on, and I was managing the money. I wanted to get to a particular level, and because why did I want to get there? One, because it satisfied, what I wanted to go and make in terms of core for the day, or what some people call a goal for the day. That's one reason. Second reason is on the charts before I went into the trade, it looked like a reasonable place to get to. So I had that going for me, and it got there. And the problem was it got there, and then it just literally just spun off of it so quick. I had no way getting out. What I probably should have done is put a TP there and gotten out, and it went against it. Didn't never go. I never went negative on the trade, but it went down pretty significantly from where I was supposed to be, and that's the part where you can become erratic, and what I mean by that is that and I think I said this to you earlier, that my goal, or my exit plan, using your idea of the exit playbook, is that, okay, if we're trying to get to here and it doesn't get there, what do I do? Where are my places where I take profit? Where are my places that I exit out? And in that particular case, what I'm willing to do is just let it go all the way back to where I just don't lose, and the way I look at it is that there'll be more opportunities to come along. Will I be mad? Yeah, I'll be mad because I literally hit where my TP was, but I just couldn't get out because of the market condition. But that's just the way I play it. And I just look at it as there's so many opportunities during the day that as long as I don't lose money on that particular trade, maybe make a little bit of money, for me, it's okay. And that's just how I look at it. In fact, you were on the phone when it bounced off of it. I was not exactly very happy, and I expressed that.
Yeah, I know, because
that's the market sometimes.
yeah, you were real close, and then it like snapped back on you by like 5 pips. It was just like, holy cow.
Yeah. So my entire, now, like I said, I was still up by a couple of pips, but the thing is, it was like, dude, and I actually saw it actually hit the level I wanted to get out. But by the time I got my finger on the mouse to actually click it, it was gone that quickly,
Right.
So, and the thing is, a lot of trading, as you said this earlier, a lot of trading is luck. And the reality is I got lucky because it never did hit my point where, okay, money management says get out here, and it did turn around, and I was able to get what I wanted plus a little bit extra. So the extra weight was, I don't know if it was worth it or not. I'd rather have just gotten my goal, to be honest with you, because then I had to sit in the trade for another 5 minutes or more.
Right.
But it did turn around and get me to the right spot. And just one more thing on that is that that's part of the reason why I stick with the trade, and as long as it doesn't go against me, I'll stay in the trade, because more times than not, it makes a second or sometimes even a third attempt at that same level. There's a reason why it snapped back there. I don't know what it is, but there's some reason, somebody, someplace, or somebody's plural, made a decision that's a place where it doesn't want to get to, or it doesn't want to cross, but it'll make several attempts at that same exact level. Look at the chart. How many times you see those wicks up there all at the same level or very close to that same level?
Right.
That's what we're talking about. So, a lot of times I'm willing to go and take that chance because, like I said earlier, I know there'll be another even if I just get out with a small profit, so what? Because there'll be another opportunity to get it.
Yeah. Now, let's just be clear for the boys and girls and non-binary traders out there. The way I say it is that whenever you're engaged in an activity where you do not control the outcome and the outcome is favorable, you got lucky. And so in trading, we enter the trades, we have all these, statistics or moving averages or whatever. We've got all these reasons to enter a trade. Well, we don't control the outcome. And so if that outcome is favorable, we got lucky just by definition. And, it's a hard pill for some people to swallow that, but that's a reality check. And I think, what's the guy, Nassim Taleb, the guy that wrote The Black Swan and Fooled by Randomness, I think he would probably agree with that statement because, he's saying that a lot of these people think they're a lot smarter than what they actually are.
You're exactly right, and you do get lucky now. Do I think that you can maybe stack your odds a little bit in your direction by looking at statistics? Absolutely.
Yeah.
But it's still luck.
Yeah.
It's it's the type of thing where the reality is that if you have a two-headed coin, right, or rather a coin, and you flip it, I don't know which side it's going to land on. And let's say I even know that coin is weighted on one side, so it's got a higher probability of landing on heads than tails. Well, guess what? It still can land on tails.
Yeah.
It just had, it's just the luck of the draw. But the thing is, more times than not, it'll land on heads. And that's the importance of taking the trades when the trades come across, because if we know that statistically, we know that 61% of the time it goes in our direction. Well, the problem is if you don't take the trades, you may not get that. You may not, you can, 61%, you can literally go and, take 40 losses in a row, and still be within that framework. It's more than possible. In fact, you could take 90 trades in a row and still be within the framework because the next 100 trades could go the other direction.
Right.
It's, it's just luck. It's probability. But, probability and statistics say that in the long haul, this is where it's going to wind up. Doesn't mean that's what happens on a particular trade. And that was probably, I'm going a little bit off topic here.
That's
I think
okay.
It's important to go and say to our traders that's probably one of the most difficult things for me to go and understand. I'm an engineer, okay? So my whole life is based on, statistics. It's based on facts, things that are hardcore. But in trading, you have statistics, you have facts. Facts. What do you mean by that? Well, we know that the market's going to be open. We know that the traders are going to move the market. Those are absolute facts. We have statistics that tell us that, generally speaking, on the pound dollar, forget about the last couple of months because the last couple of months have been nuts. But generally speaking, moves 25 to 35 bips. And nowadays, like today, we got 49, 73, 70, 43, 58 over the last, 6 hours or 5 hours. But the reality is that that's not normal. Those statistics. It gives us a clue. But what was so hard for me to understand was that even though I got statistics in front of me, even though I got hard facts in front of me, it doesn't necessarily work out. And where that was so hard for me was that it rubbed on me really bad from a psychological standpoint. It just seemed like every stinking time I went into a trade, I was going and getting nipped out of it and, and taking a loss. It wasn't true, but it seemed that way.
Right.
And then what happened was because of that, every time I saw even a little bit of profit, I was so afraid to go and let that profit go, I immediately jumped out of the trade. And it wasn't based on anything. It was just based on, I was afraid. It was an emotional reason to get out of the trade, as opposed to, okay, well, you traders hear me all the time go and say, well, I got 2 pips. Okay, that's great. I'm getting out here. Better to get 2 pips. That was an emotional decision. That was a decision based on looking at what the market does. And that is that on a typical 1-minute candle, it moves 3 to 4 pips. I'm trying to get in and out of the trade within that 1-minute candle. So that makes sense to take 2 pips in that scenario. So it was based on some relevant, statistics that are out there. Therefore, it was no longer emotional. And now I'm not taking losses the way I was taking losses.
Yeah, because I think what you're pointing out is that, if you're not careful and if you're not paying attention, all of a sudden emotions take over, and that's when you become
Right.
erratic.
Exactly, and all of a sudden now you're just doing things spuriously. Whichever way the fly flies off the door handle, that's who you're going to go. That's what you're going to go and follow.
Right.
And that gets you into trouble, and that really gets us right back to the money management part, because we tend to do that. It's like, oh, look at that, I got $500 in my account. Cool. I'm going to go and protect that under. Meanwhile, our system says no, because the thing is, statistically, we can actually get that to $1,000. Well, and as long as we get the safeguards in there that we don't take a loss on that, you just keep on taking those trades, and eventually you get that $1,000, and you get this little $100 that you get knocked out of because the rules knock you out. Not because your emotion knocks you out, but because your rules knock you out.
Well, and that's something that I think, as part of an exit playbook is you have money management, because I guess there's about at least 3 ways to look at it. Some people count in pips, some people count in dollars, and then some people look at the return on investment. Are they up 1% or 0.5%? And depending on which one you look at, it really can make a difference in your trading. So for me, I think somebody with a real small account, $1,000 or less, they should probably be focused more on a return on investment. If they see they're up, 1 or 2% a day, it's just like, hey, that means I'm growing my account. Whereas somebody, say, with a $10,000 account might just want to make, a couple $100 a day, or or
Right.
somebody with $100,000 account might want to make a couple $1,000 a day. And once again, that might only be 2%, but they're looking at pure money. So it's like, the thing about stacking bricks. You take, hey, I just made 100, I just made 100, I just made 100, and take that money off the trade, because when you're in a trade, risk is on. And you want to be in a risk-off situation.
That you're exactly right, sir. And that's how I look at trading. In the very beginning, I didn't look at a percentage of account. I probably should have, because when I was starting out, I've said this before in the videos, but I started out with it when I was first learning with a $100 account, and eventually moved that up to $1,000 account, and so on and so forth. But the thing is, I looked at it from perspective of not percentage, but just pips. It's sort of like, because I knew that if I kept on doing stacking the pips, it eventually would turn into I'd be able to grow the account. And it was just the nice thing about pips is it's an easy way to track how you're doing. The bad thing about pips is if you go and change the amount of loss that you go and trade, on each trade for whatever reason, because you're assigning a different amount of risk, you're doing, there are a number of reasons why you would do that. And we don't have enough time to get into that today, but, that can go and really mess up your arithmetic at the end of the day, because, back in the beginning, there were days I was up like 15, 20 pips, but my account was down. It's like, well, that will go and ruin your day.
Yeah. Yeah. So once again, the fastest 15 minutes is trading is just about over. So fellow traders, when you're taking a look at your money management, make sure that's not erratic either, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.